to the VITV podcast. This is a podcast that helps you grow your wealth and become financially independent. My name is Becco and my partner Hari.
Hello.
Great. In this episode, this is a continuation of the last episode. This episode, we are going to talk about big investment themes in 2022. All right. Before we start, quick disclaimer from Mr. Hari.
Yeah, this is the VITV podcast. We are here for educational and entertainment purposes only. We don't know your specific financial situation, nor are we tax advisors or financial advisors. So please consult with the appropriate advisor before making any financial decision.
Awesome. Great. Let's get right to it. So 2022, new year. We are recording this episode on the 29th of December. A lot has happened in 21, but a lot to look forward to in 2022. So the first thing is COVID. Where is this going to go? We're right now in the midst of this variant Omicron. Delta was the new scare before Omicron. Where is this going? All right.
Yeah. So in terms of Delta was kind of very much like the original variant called Alpha that led to a high percentage of patients going to the hospital, who were elderly. In comparison, Omicron, is much more infectious, so it's spreading much faster, but it's more like a milder flu, kind of season where the vast majority of people won't get hospitalized for it. The vast majority won't have any serious complications or death, from it. So, um, this is kind of the best way out of this, that we don't have a vaccine that prevents transmission. So what we end up having is a virus that everybody gets immune to, and then once they're immune, this kind of just fades away. And so what I expect to see in 2022 is the first 3 months we'll see a lot of cases, but we won't see many hospitalizations or deaths. And then people will start to realize that it's time to get back to kind of more of a normal life, like we saw in 2019.
Mm-hmm. Yeah, so basically, I mean, this is what people are saying: massive immunization effort without, mass herd immunity effort without us knowing. So, I mean, it could be a good thing. Just thinking ahead for a second, obviously, this thing kind of cold, just like any kind of seasonal virus, it'll come and it'll go. Obviously, Q1, Q2, winter in the northern hemisphere. Um, It'll probably ease up around Q2, I would assume, around March, April timeframe when
Yep.
when spring comes around. So I would say that's kind of where that sits, and with vaccines being rolled out, I think what was it, Merck or Pfizer, oral antiviral drug.
Yeah. So the thing about the oral antiviral agents is it's unclear if they're going to have any benefit for the Omicron variant. They were all tested against Delta, and Delta is no longer, the prominent strain in the country. So even if those things aren't effective, um, what I think was going to end up happening is people are going to get this naturally. They're not going to suffer significant consequences as a result of it, and we'll have people. So, like in Denmark, they had the week of December 10th, they had 50,000 cases, but they had fewer than 5 hospitalizations from that week,
Yeah,
as published this week, because hospitalizations are usually a week or two after you're infected. So
I think similar data is coming out of South Africa, in my
yes,
from what I read.
correct. So I think even if the pills are not effective, I don't think it's going to be a problem longer term for us.
Mhm.
So
So I think it's safe to assume that at the end of Q1, going into Q2, we might see some of this kind of more stricter lockdowns getting eased up in some
yep,
parts of the country. All
we
right, let's
hope
move
so,
on to
certainly.
yeah, let's move on to the next topic. 3 interest rate hikes earmarked for this year. Obviously, this discussion comes on the heels of a lot of inflation kind of data and stimulus money, and we talked about some of that in the last episode. 3 interest rate hikes. What does that mean for investors? As Warren Buffett likes to say, interest rates are like gravity. what does that mean for value investors in particular? How are your take?
Well, so I think what's going to end up happening is you're going to start seeing more, um, pullback in the market. Like I was expecting this when they would have started selling off, when they started making these announcements. But we just hit all time highs on the 28th of December. Uh, so I think it's going to take a little bit of time for the market to kind of actually react correctly to this. When the interest rates go up, um, people shift their money out of investments, and put them into bonds and other things because they can get a higher yield um,
Without
there
risk.
without risk. And so what we're seeing right now is, because the interest rates are so low, two things are going to happen. This When the interest rates rise, the value of your house actually goes down, right? Because it costs more money to borrow to pay for a new house, or things like that. So I think real estate is actually going to decrease. Transaction volume will decrease. The price of homes will decrease. This will have a significant impact on a lot of people, because the value of your house goes down. You're gonna have to spend more money on interest payments than you did in the past. So that has a huge impact, and that'll also cause the markets to kind of pull back a little bit. And so we're going to stop seeing, no growth companies, that we're getting PEs of 30. I think those days will, start to wind down in 2022.
Hmm. It'll be interesting to see how this all pans out because, I mean, the government is in a kind of a tough spot here because of the huge spending, because of the huge borrowing that happened last couple of years. When the interest rate goes up, you're also obviously having to pay a lot more interest on
Yep.
those money that you borrowed. So, what is the fine line between this is I mean this is a very, very tough spot for Federal Reserve officials, but three interest rate hikes at least earmarked for next year. We'll see how it goes, but it seems like that's certainly going to be the case. Yeah. Anyway, that's something that we should all keep an eye out for. All right. Next is okay. COVID back in the workforce. Um, what does that what does that do in terms of the market? A lot of people are going to go back to workforce. Any kind of thoughts around how that might impact the economy?
Well, I think having more people back in the workforce will be good for a lot of different reasons. That may help with the supply chain issues that we've had for the last year and a half. Um, but so I think we're going to start seeing a normalization of some of these, um, you know, consumer goods, food, things like that will start, decreasing in price. But I think certain, industries are going to be impacted more than others. So I have to think commercial real estate is going to be pretty rough, because I think the hybrid workforce, where people were working from home, you know, in COVID, we're working maybe 100% of the time or 90% of the time at home and 10% in the office. I don't anticipate that's going to be, you know, completely going away and we're going to be 100% back in the office. And so I think a lot of businesses are going to, reduce their office footprint. They're going to reduce um, their outlay on commercial real estate. So there's going to be some, shifting there, to get, as the office work goes back. But I think the good news is that as people start to go back, we're going to start seeing somewhat reduction in the price of goods and services, which will help, with the inflation as well.
Hmm. Yeah. Yeah, we'll see how that. We'll see how that. I mean, commercial real estate is one thing. I think supply chain issue, which we talked about in the last episode. We'll see how that sort of eases. Let me just make one more comment before we move on to the next topic about the inflation and about the interest rate hikes. It's been interesting running the podcast with you, Hari, over the past, I don't know, 3-4 years now, because we've been in an environment where interest rate has been so low, historic low, right? And a
Yep.
lot of people speculate on the market because it's riskless in some ways because there is no risk because because the interest rate is so low. You can be really far out in the risk curve and be okay because you're not really discounting that future cash.
Right.
So so over the past 4 or 5 years that we've been kind of doing this, Ari, a lot of the value, kind of like hard value, and really analyzing the data and analyzing the companies didn't quite work as well, because you could just speculate in the market and just have 10x 20x returns
Right.
and buy these like crazy speculative assets, and that was fine because that was kind of the macro environment. But now perhaps this is a time that it changes over to where you need to be a little bit more diligent about what you or where you put your money, because now the risk is going to be at a level where it sort of makes sense and where the market actually makes sense. But I mean that is at least kind of where theoretically it should go. But I also am wary that the government is in a very, very tough position here because they borrowed so much money.
Yeah.
And if they raise their interest rate too much, I mean they're going to tank the economy, and that's not good either. So tough call.
Yeah. I mean, I think you bring up some really good points there about, we're in a rock and a hard place, as far as inflation goes. And, you've kind of turned all the levers over the last 12 to 15 years to make the economy, kind of move. And, under the previous administration, the economy was red hot until COVID hit. Um, and then we started doing more stimulus, which is hurting, I think, hurting the supply chain, hurting the inflation, and so the only, thing that you have is lower interest rates, or is to raise interest rates to kind of tape down the inflation amount. So where this all leads to is, as value investors, I think it was a lot of us who have been frustrated for the last, I don't know, 5-10 years, where there are some deals that we find that are really cheap, but they just don't get the love that the Facebooks and the Googles and so forth of the world get, simply because that's where all of the money is going, right? I think now the FANG stocks account for a, a large percentage of the S&P 500, um, and so
So
that creates its own problems, um,
yeah. So some people say Apple stock is the new U.S. Treasury
right.
bond.
Well, I don't know that is really going to work out. It's great if you bought it at a reasonable price, right? But there are lots of deals that are out there, to be had as value investors. And I think as the interest rates go up, those deals become a lot more interesting to people, because now you're actually dealing with valuations that were closer to historic norms,
Hmm. Yeah, I mean, I think the with the macro environment that we are in, it is so easy to just bet on the macro environment and not have to actually do the due diligence to understand each of the companies and the fundamentals, because the macro really dictated the market.
Yep.
One of my friends told me earlier when we first started the podcast, he was like, "Why would I do all this work when I can just buy S&P 500 and it's fine? Like you can just bet on the macro."
Right.
And to be fair, that was true. That has been true. That is still true
Yep.
in many cases. Um, it's really yeah. So we'll see how it goes. With the interest rate go When the interest rate goes up, then the calculus may differ, and some of the more detailed fundamental analysis that we do here between you and I and the podcast and the whole community, that might make more sense in the future. Regardless of the macro environment, I think it's just a sound fundamental business principle to do your research and do the
Yep.
fundamental kind of calculation, even if the macro environment suggests otherwise.
Right.
That's just my take and my principle. But yeah, that's been where we've been sitting. So in 2022, we'll see what happens. Certainly something that we should keep an eye out for. All right, last item before we close out the podcast: election. What's going to happen this year? How is that going to impact the market?
So I think the American people will have their opportunity to speak in, November, of 2022, and what we'll probably see right now, if things hold the way they have been for the last 6 months or so, the president and has fairly low approval ratings. The economy has not been doing well, and I think it's affecting a lot of people at the gas pump and things like that. So I think we're probably going to see the House and the Senate shift towards the Republican side of the aisle, and what that'll mean is more gridlock in the U.S. In terms of getting the infrastructure spending passed and things like that. So I don't think that this is necessarily a bad thing, because right now what we don't need is more stimulus and more inflationary pushes. Right? If the interest rates do indeed go up, this may have a pretty significant impact on the market as a whole. And so throwing more money into the mix is probably not the answer that we want as a country. And so I think a lot of people know that intrinsically, and will vote that way depending on their and to be fair, the Democrats had a very slim majority to begin with, so it's always pretty dicey. And this, it's natural for people to kind of vote against the group in power just because they're unhappy for whatever reason. So I think throw on top of that, the stimulus and all of the other economic hardships that a lot of people are facing, you're probably going to see a shift in the winds, politically. So
Yeah, that's obviously going to come in November, and I suspect that during election season, a lot of freebies are given out,
yep.
or at least cheap words. Words are cheap, so I suspect that a lot of that rhetoric will kind of affect the market in ways that, yeah, perhaps it's still difficult to predict, but I think because it's election year, I think it'll definitely affect the market. Yeah. Okay. Any other thoughts on 2022?
No, I mean, I think if you are looking to invest, as we have talked about on the podcast, and I'd encourage you to go listen to the podcast that Beko did with Sunil Shah, where he talked about India. I think the next 5 to 10 years are going to be interesting in certain regions of the world. India, I think, is where China was maybe 15 or 20 years ago. So I think there's going to be tremendous growth there. Um, Africa is also generating a lot of buzz, and spending. So, even though it may be discouraging to look at the U.S. and say, we've got a lot of debt and things like that, I think there are regions in the world, Southeast Asia, India, and Africa, where there's a lot of growth ahead for those places. For them to become first world countries is going to take 20 years of a lot of growth to get there. So
Yeah. Yep, absolutely. I think also a couple things I want to say about that. With the interest rate, again, kind of going back to the macro picture for a second, with the interest rate so low, if the interest rate rises, the capital will flow in to the U.S. bond. But
yep.
if the interest rate stays low, like this, what will happen to the capital is people will chase returns. And if you want to chase higher returns, you got to go further out in the risk curve. And obviously, emerging markets is a bit more risky. And
Right.
so money has been flowing to the emerging markets and will continue to do so because people are seeking that alpha.
Yep.
Another thing I want to talk about there is people think that it's very difficult to invest in overseas market because it's you got to open up an account at overseas exchange, things like that. There's actually a lot you can do just within U.S. exchange.
Yep.
There's over the counter stuff. There are companies that are listed here on the American exchange that operate overseas. There are companies that have headquarters in the U.S. but have huge operations overseas. So if you do your research, you can find really good opportunities. And so I would encourage people to look for those also. All right. That closes out our podcast this episode. Thanks again for listening, guys, and hope everyone is safe, and hope everyone has a wonderful New Year. And I'll see you guys in the next episode.
Yeah, and please like, comment, and subscribe on our YouTube channel. That'll really help us grow the channel. And Email us if you have any questions, info@valueinvestor.org, or if you want our copy of our checklist, info@valueinvestor.org. We really appreciate your continuing, support and listening. And I think we have plenty of good things coming in 2022 for all of y'all. So appreciate everything.
All right. Happy New Year, everybody.
Yep. Happy New Year. Thanks.
Bye.